In this video, we are going to look at the Las Vegas rental market for multifamily properties. And if you remember, back in the Great Recession, Las Vegas was one of the hardest hit cities in the country. So much so that A&E did this big fix and flip series. I can't remember what the heck it was called, but this fix and flipper went around and he was fixing all these foreclosures, going into just these destroyed places because people had lost their homes, different things like that. I know that doesn't have anything to do with the rental market, but let's see how the rental market is doing now as we start to enter what could be either a soft recession or a pretty big recession. So we don't know the answer to that yet, but let's see what the rental market's doing right now on the way into it. So as usual, we are going to look at our filters of excluding all corporate, all military, all senior, and all vacation, and only including market and market affordable, so that we're only looking at conventional apartments, conventional rents, not low income, not senior, not student, conventional. For location, we are sitting in the metro statistical area for Las Vegas, Nevada, which you can see is drawn out here. Okay, this line right here is the California-Nevada state line. All right, so that said, let's go look at Class A, B, and C combined for our analytics and our supply snapshot. So if I click on analytics and head over to the supply snapshot, you see it pulls up here. We have 2,999 properties totaling 190,201 units. 8,527 units are currently under construction, and oh boy, 3,624 more units went vacant in the last 12 months than occupied, when the prior period it grew. So an additional 2,617 absorbed or were occupied the year prior. In the last 12 months, 3,624 more units went vacant than occupied. And we can see that in the vacancy, with the previous 12 months being 5.7% and the last 12 months being 9.1%. So that is a huge jump, one of the biggest jumps we've seen yet. And for the first time of all the videos, this is video number 15 of 15 videos in the last 3 weeks. This is the first time we have seen a year-over-year decline in market rent on the supply side snapshot. So, that said, let's look at our long-term occupancy average. So as you can see, that the market is stable at 92.11 occupancy, according to the long-term average over the last 22 years. It is currently sitting at 90.89. Since we've got construction and deliveries occurring, then we know we are on the right side of the market cycle chart, looking at the 4 phases of the market cycle. That long-term occupancy line sits at 92.11 on the market cycle chart. We're currently sitting at 90.89. What that tells me is that this market is sitting below the long-term occupancy average line. So it looks like, without looking at the rest of the data so far, that Las Vegas is currently in recession for multifamily properties, more specifically, conventional multifamily properties that get conventional rents. All right, so let's be specific about that. But let's go see what the data tells us. So here is the data for Class A, B, and C combined. Again, we do not look at asking rent. That is what the property manager is asking for the property. We want to know what the effective rent is, what the property manager is actually collecting, or the landlord or the owner, or however you want to look at it. If we look in Q1, we see that Q1, they were getting $1,447 of 2022. It went up to $1,467, and then the downtrend started. And we can see that in fourth quarter of 2022, it was actually lower than the first quarter of 2020 or fourth quarter of 2021, which is why we see a negative 1.4% year-over-year growth in effective rent. Okay. And as we saw in the supply snapshot, for the first time, we have a negative growth in asking rents. All right. So let's see what the supply tells us. And as we can see here, well, that pretty much tells a story. Okay. And the absorption that we saw, the negative absorption that we saw, the 3,000 something units from the supply snapshot is definitely indicated here. So they delivered close to 1,000, 2,000, 2,200, let's just call it 2,400. They delivered 2,400 vacant units to the market, and then an additional, 2,300, 3,300, 3,500. I mean, look at this. This is insane. I'm not even going to try to even justify this. You've had almost 7,000 units. Is that right? Let's call it between 5,000 and 6,000 units have gone vacant in the Las Vegas market since fourth quarter of 2021. This is the worst we've seen yet. This definitely confirms that the Las Vegas market is currently in the recession phase of the market cycle, without a doubt. I don't even have to look at the other three classes. We'll see what A's, B's, and C's look like. But this is the worst we've seen yet. This is terrible. So let's go see what the Class A properties are telling us. So here's our Class A data. As you can see, we have 122 properties totaling 35,421 units. And if we look at our effective rent, we can see that rents were $1,771 in the first quarter of 22, went up to $1,800, down to $1,732, down to $1,687, showing a year-over-year decline of 3.8%. So we are well below where it was in fourth quarter. As a matter of fact, we got to go all the way back to second quarter of 22 or 21 to be above rents. This is the worst we've seen to date for Class A. Let's look at our deliveries under construction and absorption to see how it fared. So we got about 1,000 that have delivered, just shy of 1,000 delivered. Absorption, not too terribly bad here. So it is not the Class A that is dragging down the absorption. The fact that you've got such terrible negative rent. This is the second time we've seen this. We saw this in Oklahoma City yesterday, where we've got a deep decline in effective rent with at least a teeny bit of absorption, better than what the rest of the market shows, but definitely not absorbing what's been delivered. So that said, we do have an indication here that the Class A market's declining. Let's go look at what the Class B tells us. Here are the Class B rents. We can see there are 686 properties in the market, totaling 103,581. We are looking at effective rent, and we were at $1,457 Q1 of 22, went up to $1,478, and then started our trek down to $1,415, giving us a negative 1.4 year over year because it was $1,435 in Q4. Now, not quite as bad in downtrend as the A's were, but let's see what our absorption data tells us here. So we start to see a much different tale. So we have, what do we got here? About 700, 12, 13, maybe 1,300 units somewhere in there that went vacant, and then an additional 1,008, 2,400. So about 3,600 units gone vacant, and negative absorption has been happening all the way back to 2021 of Q3. This is definitely the first time we have seen this large of a trend in negative absorption in any market that we've seen yet. The surprising thing here is, and it really goes to show how developers do not watch the market or the consultants that they're hiring to do their market studies for them are not paying attention to what's happening, because there were 2,310 under construction in fourth quarter Going into first quarter 22, more went under construction, even though absorption was declining. Then more units went under construction. Another 800 something went under construction the next year. And it's probably more than that because we had deliveries, so almost 1,000 units. Then even more units went under construction, and even more units went under construction, even though the absorption was negative during this whole period. So that just shows you that these developers are not paying attention to what's happening. And when you ask the question, why do we always go into oversupply? Here is an absolute indication of why that happens. Las Vegas, I'm sorry, but you are in a lot of trouble. But the good news here, if there's good news at all for people that are investing, is Las Vegas, according to this, should be one of the first to the bottom. That's kind of an indication here, but again, it depends on how many of the remaining under construction units can absorb. So we see that the B's tell us a sad story. Let's see what the C's tell us. So here's our Class C rent data. We have 1,959 units in the market, totaling 50,096 units. If we look at our effective rent, our rents were $1,109 in the first quarter, went up to $1,119 in the second, and then started trending down. So this is one of the few markets, well, about half, where the C's are trending downward. And I think it's going to be a big indication of the residents not renting these units and having negative absorption. I haven't seen the data yet, but I can look over here at vacancy and I can see that that is absolutely the case. So let's go see what absorption tells us. So as it should be, there aren't anything under construction or delivered, although it is showing 89 units under construction here, which for 6 straight quarters, you've been in negative absorption and you're going to put 89 units under construction. What are you thinking? In any case, the Class C market is just as bad as the Class B's, goes all the way back to third quarter of 2021 of negative absorption. And as usual, you don't deliver Class C apartments brand new. These will be delivered as Bs. They're probably in a C area, which is why CoStar has them here. But the rents could not sustain the continued growth because people were moving out. And as people move out, the owners have to put other people in or they'll go below their debt service coverage ratio or go negative cash flow. So they have to lower those rents. And that is definitely what's happened here. So confirmation that the Las Vegas market is absolutely for multifamily properties, not all asset classes, just multifamily properties. It is definitely in the recession phase of its market cycle. And I'd put it just in that first spot below the long-term occupancy average because it hasn't dipped too far below its long-term occupancy average. So it's still got quite a ways to go down. Hopefully you bought right in this market if you bought, because it looks like from what we're seeing with the amount of units that are still left to be absorbed, if we go back to our snapshot, I'm just in the Class A's. Let me change this back to all asset classes. Not Class A's, we were in the Class C's, but here we go with all asset classes. You can see we still have 8,500 units to absorb. This tells me that we are probably going to see close to a 20% reduction in rents in this market. So once again, in a recessionary cycle, Las Vegas is being hit pretty hard by downward trends. So that does it for the Las Vegas MSA. Clearly, it is in the recession phase. And on Monday, look out for Fort Lauderdale, Florida. I will see y'all on Monday. Have a great weekend.